Hello traders, welcome to another video on my channel. So in this video I'm going to be showing you, we are going to be looking at order flow. I'm going to be showing you the difference between order flow and order blocks and how you can use order flows to enter trades effectively and maximize your wins while minimizing your losses. So before that, if you are new to this channel, please hit that subscribe button, like this video and leave a comment. So let's take a look at the chart. So here we have an example, right? We have an example of this trade. So I'll be showing you how you can get this type of trades using order flow. Then later in the video, I'm going to be showing you the difference between order flow and order block. You should know that order flow is primary, then order block is secondary. So when you are marking your structure, many people use order blocks as their entry criteria, but at the end of the day, order flow is the best entry criteria that you could use. So let's start with an illustration. Okay, let's say we have a market that is going up, right? We have a bullish market. So looking at order flow, we have this. Now, what is being defined as order flow is this zone. This zone here, this pullback, starting from this, the pullback high to the pullback low here. Same as this one here. This is our most recent order flow, the pullback high to this pullback low here. Now, if you are marking your order flow, you mark it like this. Some people may look at this, it resembles support and resistance, right? It resembles support and resistance. If you think at it as support and resistance and you are able to quickly remember it, then go ahead. So now, after marking this, right, this is our order flow. So starting from this high here, down to this low, this is our order flow. Now, if you see here, if you see from here, you see that this zone was not really quite mitigated. So how can we take our order flow? How can we take an entry using this order flow, right? What we need to wait for is for price to take out inducement and rally up. So when price takes out inducement, whenever price taps into this zone, once price taps into this zone, you can extend it forward and gives us a smaller time frame change of character somewhere around here. We can buy and we target this high. So now this recent order flow here was violated because there was no inducement. So the low of this order flow acted as inducement. That's why we never considered buying directly from here to continue up. But if it was that there was maybe some sort of a pullback here, we could have bought from here. Then when the pullback was taken, we could have bought and continued our right up. So basically, this is the foundation of order flow, right? And if you flip this diagram, the opposite way to get the bearish scenario, you still see that it's just the very thing, right? We have our order flow starting from here to here. Then we have the most recent order flow. Then since there is no inducement, the recent order flow acts as inducement, and we look for a continuation down. We look to sell and continue down, right? Also, you should make sure that this order flow is not mitigated already. If the order flow is already mitigated, then that becomes low probability setup. This is our order flow here. This is our recent order flow, but there was no inducement before that order flow. So the high of this lower high here acts as our inducement. Now, when price taps into our order flow here, right? When price taps into our order flow after taking out inducement, that's one of the most things that you need to remember. Price must have taken out inducement before you can start considering our order flow. So you can wait to a change of character in a smaller time frame here and you go in for a short. You can go in for a sell here when the smaller time frame occurs. So now, what is the advantage of order flow over other blocks, and what is the advantage of other blocks over other flow? So we'll be starting with advantages of order flow over other blocks, right? So looking at this, you see that if you are using order flow, you have a higher mitigation rate, right? Many of your trades, you will not be left behind. You not miss out on many of your trades. So this have a higher mitigation rate. So you have many more trades. And coming to this order flow, the major disadvantage is that you have higher stop losses. So taking into consideration, right? If you are taking a trade in here, let's say you are taking a trade here, it will be more advisable to put your stop loss under this low. Put your stop loss under this low, then you should target this high. That is how your position should look like. Now, if you were using, maybe you were using other blocks, you could have refined this. You could have refined this entry maybe down to here. You have a higher risk to reward and a higher risk to reward, but you have a low mitigation rate. So that means you miss out on many of the trades. But with order flow now, you catch many trades, but you have a wider stop loss. So as you can see in this diagram, this is just basically how our order flow trading strategy works. So will be going over to the chart. I will show you this trade which I got using the order flow entry technique. So as you can see here, right, this is the most recent order flow that we had. This is the recent pullback. So the high of this pullback started somewhere around here. The high of this pullback started somewhere around here. So this was supposed to be our last order flow, but looking at this, you see that there was no inducement before this order flow. So our last and true order flow now was this order flow here. You can see quite clearly it's unmitigated. It's unmitigated here. So now when price took out our inducement and tapped into our order flow, we started looking for a change of characters here. So the reason why my entry is right down here is because this is where I got my change of character in the smaller time frame. So once the change of character occurred, we enter here and we targeted the high. As simple as that. You don't need many things to trade order flow. And you should know that the market prioritizes order flow mitigation than other blocks. That's why you see that many times your other blocks don't get mitigated, because the market mitigate when order flow is mitigated is counted as a mitigation as well. So yeah, the only time that you're supposed to use other blocks is when there is no unmitigated order flow. Now you can refine down to an order block. So that's why we say order flow is primary and order block is secondary. Then if there is no order block, you can refine down to weeks. If there's no unmitigated week, then you can now start looking for a sweep entry. So guys, if you are still watching to this point, that means you find interest in my video. Please subscribe to my channel and help me grow. Also, I'll be leaving the link to the broker I use in the description of this video. So if you want to check out the broker with good spreads, good withdrawals, fast processing speeds, right, instant executions, you can check out the description of this video. You see the link to the broker I use. So let's look at another example. Okay, in this next example, we'll see a more complicated order flow and how you can refine order flow, right? Okay, so coming over to a more complicated order flow, we have something like this, right? Okay, let's say you have a market that looks something like this. And You see here, this is our main order flow is from this high. Our main order flow is from this high, right? That is our main order flow. So once market has taken out the inducement, which is anticipated to be this zone here, sorry, which is anticipated to be this zone, right? We can now start looking for our buys when the market uh, rushes into this our zone here. But now, if you look here, you can see that we have uh, minor order flows here. We have this here. So if you look at it, you can see that we have this. You can see that this order flow here, right? It's already mitigated. This internal order flow here, it's already mitigated. And what is not mitigated is this order flow here. So now we can highlight this out. We can highlight this our order flow and look to take our entries from this order flow instead. We can look to refine this order flow and take our entry from this order flow and continue. Same as maybe this order flow might have been mitigated and the one below is not mitigated. Here you can look to take your entry from. This one is how you can refine order flows. So you can refine this order flow and take your entries from here. Now, the most thing I want you guys to understand on order flow is you see this order flow here, right? You see this zone here that is called an order flow. Maybe it's on the 1 hour time frame. If you go over to the one day to the daily time frame, you see that this zone here is an order block. It's an order block or it's a demand zone. So this order flow like this, these order flows will help you now to shrink. That means if you are in a daily time frame, if you highlight a zone on a daily time frame, you come over to the 4 hours time frame, look at the zone. The zone will likely give you an order flow. So that is how this work. So guys, that will be all for this video. Make sure that you check out the link to the broker I use in the bio. I will be leaving the link to my TikTok. I make very short and straightforward videos on TikTok, right? That I simplify this and I compress them into 1 minute videos. So yeah, if you're interested, check out the link. Make sure you check out the link of my broker.